How high can inflation go? What happens next? These are the questions on everyone's minds as the global economy teeters on the edge of uncertainty. Inflation is a complex phenomenon, with far-reaching effects on everything from the cost of consumer goods to the value of major assets like Bitcoin. Understanding these dynamics is crucial for investors and the general public, especially when the stakes are as high as they are today. Hello everyone and welcome to our channel dedicated to the world of cryptocurrencies. Here you will find market updates, project reviews and advice to help you make informed decisions in the world of cryptocurrencies. I invite you to follow me on the channel to always be updated. Let's look at the potential impact of inflation on Bitcoin, the market as a whole, and what we can expect in the near future. First, consider the potential extremes of inflation. Historically, inflation can spiral out of control if not managed properly. We have seen examples in countries like Zimbabwe and Venezuela, where hyperinflation has essentially rendered the local currency worthless. While major economies such as the United States or the European Union are unlikely to face such extremes, even moderate or high inflation can have significant consequences. It erodes purchasing power, meaning that the money you have today will buy less tomorrow. This impacts not only everyday consumers but also investors who hold assets in traditional currencies. So, what role does Bitcoin play in this scenario? Bitcoin, often called digital gold, has been hailed as a hedge against inflation. The idea is that unlike fiat currencies, which can be printed at will by central banks, Bitcoin has a fixed supply of 21 million coins. This scarcity should protect it from the devaluation that fiat currencies experience during inflationary periods. However, Bitcoin's role as an inflation hedge is still debated. While it has shown potential, its volatility makes it a risky proposition for those seeking a stable asset. Bitcoin is currently slowly consolidating higher, recovering from recent lows around $49,000. This rebound has come despite a number of challenges, including market rumors, speculation, and broader economic uncertainty. One of the most compelling arguments for Bitcoin's continued growth is the potential for the largest asset bull market in history. Some experts believe we are on the verge of such a market, driven by factors such as increased institutional adoption, new investor entry, and continued development of Bitcoin-related technologies. Despite this optimism, there are concerns. For example, the recent trend of consecutive days of outflows from Bitcoin exchange-traded funds, ETFs, in the United States suggests that some investors are pulling in their oars. However, this is not the whole story. Globally, Bitcoin accumulation continues. Australia's Bitcoin ETF, for example, continues to grow, and in Africa, over 110 companies are now building on Bitcoin. This global interest suggests that Bitcoin adoption is far from slowing down. But why does Bitcoin continue to gain ground, despite central banks intervening in the economy? One reason is that central banks, by increasingly intervening in setting prices, have created an environment in which traditional assets are seen as less reliable. Whenever there is a market crash, central banks intervene to prevent a full economic cycle, preventing the natural corrections that typically occur in free markets. This interference has led to a growing interest in decentralized assets like Bitcoin, which are not subject to such manipulation. The next Federal Reserve meeting in September is a crucial moment. The Fed has reloaded its ammunition, so to speak, having raised interest rates above 5% and sold about $2 trillion from its balance sheet. This gives it the flexibility to lower rates if needed to stimulate the economy. While the Fed has been criticized for its handling of the economy, this preparedness could mean it is ready to act quickly in the event of a market slowdown. What does this mean for Bitcoin? If the Fed decides to cut rates, it could lead to an influx of cheap capital into the market, some of which could flow into riskier assets like Bitcoin. Bitcoin has historically benefited from such market conditions, as investors look for alternative assets that offer higher returns in a low-interest environment. Furthermore, the possibility of another round of quantitative easing, QE, is not a question of if, but when. QE involves central banks injecting money into the economy to encourage lending and investment, often leading to higher inflation. If this were to happen, the amount of money printed could be astronomical, with the potential to drive up the prices of assets like Bitcoin. Some analysts suggest that we could see 2, 3, or even more printing cycles, each of which could likely push the price of Bitcoin higher. But what about other cryptocurrencies and assets? Altcoins like Caspa and Solana, as well as developments in cryptocurrency gaming, are also things to keep an eye on. Caspa, for example, is gaining attention as a promising project, with companies like Marathon Digital investing in its mining. Solana, on the other hand, is seeing innovations in areas like global financial infrastructure, as demonstrated by recent developments at the Global FinTech Fest. These altcoins and projects represent the broadest diversity within the crypto space. While Bitcoin remains the leader, these alternatives offer unique opportunities and risks, and their performance can sometimes outperform or diverge from Bitcoin's path. So, what could break Bitcoin out of the current sideways consolidation? There are 3 main catalysts to consider. The first is time. Historically, markets tend to be sideways during the summer, as investors are less active. As people return to their routines, we often see an increase in market activity, which could benefit Bitcoin. Second, a Fed rate cut could inject capital into the market, some of which could flow into Bitcoin and other cryptocurrencies. Third, political events, such as the re-election of a pro-Bitcoin candidate, could also spur a rally in the price of Bitcoin. Meanwhile, the cryptocurrency industry continues to make strides in mainstream adoption. For example, the integration of blockchain-based gaming with traditional gaming platforms like the PlayStation 5 is a significant milestone. The recent playtest of Off the Grid, a blockchain game and now available on PS5, shows how far the industry has come in just a few years. Finally, let's talk about what the future holds for Bitcoin and the broader crypto market. With developments in blockchain technology, increased political interest, and continued economic pressure, the future of Bitcoin and other cryptocurrencies looks promising but uncertain. Investors should stay informed and prepared for both the opportunities and risks that lie ahead. In conclusion, the world of Bitcoin and cryptocurrencies is complex, rapidly evolving, and intertwined with broader economic and political trends. Whether you are an experienced investor or just starting out, staying informed is key. As we move forward, keep an eye on central bank actions, political developments, and technological innovations, as all of these will play a role in shaping the future of Bitcoin and the broader crypto market. With that said, thanks for following us this far. Don't waste your next crypto flight. Thanks for being with us. If you want to stay updated on the latest news in the crypto world and not waste a crypto adventure, hit that follow button and activate the bell. Ready to go? Then see you in the next video.